You want to invest, but you are scared. Scared of losing money, scared of making a mistake, scared of sounding foolish. Let's talk. Hi, my name is Ola. Welcome to my channel. Today we'll be talking about how to actually build confidence before you start investing. So this is for everyone who has struggled with actually starting to invest because of one thing or the other. So I'm going to be talking about 5 things that you can do to build your confidence before you start investing. Number 1, acknowledge the fear. It's valid. It's not shameful. I have actually met people who make reference to the 2007 meltdown as the reason why they still do not invest in stocks today. It is very valid. You've been scarred. You've had stories. You've had personal experiences. People lost all their life savings. And so it's very, very valid for you to feel like, no, I shouldn't touch the stock market. Or you heard about an investment in a business around you and somehow or the other it went bust. And in your mind, I will never invest in venture capital. I will never do private equity, and these things are actually valid. However, staying frozen means that you lose out on time and compounding, which are your best friends when it comes to building wealth. So while these fears and the drivers of these fears are valid, you have to acknowledge them, put them in the right place, recognize that they are actually fears. It doesn't mean that they would actually happen to you. So understand that 1, they are valid, but 2, you need to move past it. Yeah? So the first thing you need to do, acknowledge the fear, recognize that they are valid, but understand that you need to work your way out of it, right? The second thing that you need to do is to educate yourself, but keep it simple. And it's very, very important. Keeping it simple, I think, is the most important thing. Why do you need to educate yourself so you can build confidence? Because obviously, what do you know that you are doing? It's just as simple as that. If you don't begin to understand what you are doing in a particular investment, you can never be confident, and that's just it. So you need to start that journey of educating yourself. Now, what does educating yourself mean? Educating yourself means I don't want to do stocks because of 2008 financial crisis. So I need to understand how the stock market works. I need to see, do people really make money in the stock market? How do they make money? How do I position myself? Those are basic logical questions that you can ask. And it's only when you start asking those questions that you can begin to find the answers. Right? For a lot of people, especially with 2007, and I mean, if you are someone that was impacted in one way or the other by that 2007-2008 meltdown, or if that's your reference point, please drop in the comment section. And also let me know if you would like me to actually unpack what happened there, so you actually understand what happened and why it wasn't the end of the world. Because for a lot of people, if you stay through, if you had patient capital, you would be smiling to the bank right now. But if you would love for me to unpack 2007-2008 financial crisis in a video, please drop in the comment section. But the most important thing is that you need to educate yourself. And how can you do that? 1, find where your gap is. I do fixed deposit. I understand it. But what's the commercial paper? Or I understand commercial paper, treasury bills. I understand those ones. They're plain and they're simple. But you see, this stock market is not my thing. So what are you supposed to be looking for? Books on stocks. Who are you supposed to be following? People that talk about stocks in simple English, because you have to keep it simple. At the minimum, subscribe to my channel. At the minimum, also after subscribing, please drop in the comments if you want me to talk about anything. Just drop it, right? Let me know. As I'm building my content and recording, I will be adding all those things to my content plan. Why? Because that's what this channel is for, right? So apart from subscribing to my channel, another thing that you can do is read books, buy books about stocks. But why do you need to do that? Because you need to invest. And why do you need to invest? Because you need to build wealth. But for you to invest, you need to understand what you are doing, or else you will not be confident. You would not know when to stop. You will not know when to keep going, to forge ahead. You just will not know. So you need to actually get educated. So the second thing you need to do is get educated, but keep it simple, because it can get overwhelming if you don't. Yeah. The third thing that you need to do is to start with a plan and not a product. So before you go into the actual what am I investing in and all, you need to just have clarity on what you are doing. Why? Because fear thrives in randomness. Fear thrives in spontaneity. Like when everything is spontaneous, you're just thinking on the go, then you begin to question yourself more. So that plan of, okay, I'm going to be buying stocks every month. I'm going to be putting an amount that I will not afford to lose, and I will decide on what that amount is. If it's 10k every month, and I'm going to do a video. The next video I'm going to do is on how to invest with 10,000 naira in Nigeria, or $10 wherever you are in the world, right? So what am I saying here? Have that plan, have that clarity, and say 10k every month is not going to kill me. What is my timeline? How long am I going to keep doing this? What is the goal? What am I trying to achieve with this? At the end, I want to have this amount in stocks, right? That kind of plan. This is before taking action. Why? Because what are we trying to do here? Build confidence. The most important thing at this point is deciding on that money I can afford to lose type amount, and knowing that this is where it is going to go, and this is when it is going to go there. And if there's like a newsletter, the stockbrokers send out weekly reports or weekly forecast or stock recommendations on this day, I would read this, and this is what I'm going to use. Just having a plan. Why? Because I repeat, randomness is what kills confidence. Totally. So if you want to build your confidence, then you need to have some kind of plan that you can stick to all the time. Yep. Now, the fourth thing that you need to do is to take action. Hey! I always talk about baby steps, right? Yeah, because after all the learning, after all the reading, after all that, right? If you do not put your leg in the water, it's a lie. You don't know anything. And this is something that I remember that happened, and I have an investment community. It's called the Money Weight Club. You can check us out. The link will be in the description. I remember I had a member of the club who was very skeptical about investing in stocks at that time, and she actually did an investment. Like she finally bought into a particular stock. But what I realized, I didn't know that she had started buying that stock. But then when there was news about the stock, what will happen? She kept on asking questions, and she just started understanding more and more. And I had to ask at a point that, do you have this stock? And she was like, yes. Why? Because her ears became open when her feet stepped into the water. So there's learning while you are reading, there's learning while you are listening to people, but you understand that in the office, right, after you've done your first degree, blah blah blah, there's now on the job learning. Like there's the actual real deal. That's what you need to get into. Now remember, we talked about money that you can dedicate, right, to investing consistently. Now it's also important to say that you don't need to have big money to start investing. Like I said, we're going to have a video. The next video I'm going to do is going to be on how to invest with as little as 10,000 naira or $10 wherever you are in the world. But fundamentally, you need to start investing. Why? Because your ears will open only when you put your feet in the water. It begins to make more sense, right? And you would now find that it's not as bad as you thought it was. Your first dividend would excite you. Now you would see the ups and the downs in the market, and you realize, okay, it's not so bad. No matter how much I tell you it's not so bad, it's not that bad, it's not that volatile, right? Because of the stories you have had in your mind in previous times, you will just be saying, okay, I hear you. It's not like I don't believe you, but but when you put that little amount in and you see how it goes up, down, dividend, interim dividend, newsletter from your from newsletter to investors, all those updates, all those things, regulatory impact, blah blah blah, it begins to make more sense. You begin to build confidence. Yeah. And also note that what happens is that you are using small money to learn investment 101, right? So those little steps, that's what strengthens you so that you can double down harder when you really understand what you're doing. So it's very, very important in this trying to build confidence to actually start with something small. Give yourself a year and say, in this year, all I'm doing is just learning to understand the market, learning to read the market, learning to understand the companies I'm putting money in, learning and allowing myself to make mistakes, right, with something that will not impact me significantly. So very, very important. The fourth thing that you need to do is to actually start with something very little. Now, the fifth and final thing is to reframe risk, right? The fact is, everything is not 70% chance of loss. There are things that are 10% chance of loss. There are things that are 0% chance of loss. There are things that are 5% chance of loss. Not all risks are the same, right? Such that you can actually build a portfolio that your risk mid-level and you will still make money, you will still grow, you still build wealth. Right? So reframe how you see risk as moving from binary, black or white, to shades, from white to black, like so many shades on that journey, right? And you don't always have to be on the black, neither should you be on the white. Like there's so many in-betweens. So when you are thinking about risk, don't think of risk as I either make money or I lose, binary. Think of it as different shades of gray. Think of it as a transition from white to black and all the shades of gray in between. Why do I say this? Because risk is not the enemy. Understand that when you put money in an investment, what you are doing is that you are partnering with the raiser of that capital, right, to take some risk, such that when you hear things like the higher the risk, the higher the return, it is because if you are taking risk, then there should be a reward for that risk. So the return you are expecting is a reward for risk. So how would you expect return if there's no risk? So your job is to actually frame risk as something to be managed, something to be mitigated, something to balance out. So if I'm taking high risk on this, then I should go low risk on that, right? As against the binary of I don't take risk at all, or I take extreme risk on the other hand, right? So reframe how you see risk. It is not binary. It is very, very important. Why? Because in that journey of education, you see that not all investment opportunities are the same when it comes to risk, right? So you have to also start thinking that way. Now, the bonus point here is to find an accountability group, some kind of group, some kind of community, right? If you would like to check us out, the Money with Club, but have a friend where you guys bump ideas with each other. You may both be rookies when it comes to investing, but you can learn together. You can ginger each other to put that money away, to take that first baby step, right? But somehow when you have that, I want to build wealth, I want to start investing, and you have someone that is on that journey with you, thinking, giving you ginger, rubbing off on you, finding information, it makes it faster. It makes it easier. So in summary, it is very important to understand that confidence doesn't necessarily come before action. Confidence will actually be built as you take action. That is very important to note. Confidence will be built as you take action. So the most important step isn't actually to know everything. It is actually to start. Start where you are. So in summary, what you need to do to build your confidence so that you can start investing? Number one, acknowledge the fear and that it is real. Number two, educate yourself, but keep it simple. Number three, start with a plan and not a product. Number four, actually take action. And number five, reframe risk. And the bonus point is to get some kind of accountability group or community around you that will give you the ginger that you need. Trust this was useful. Always remember that you can't outsource your health and your finances. You have to engage. No one can go to the gym on your behalf and you'll be fit. Neither can anyone eat on your behalf and you would be healthy. It's the same way you can't outsource your health and your finances. You always have to engage. See you in the next video. Bye.